bond market's been very clear here, seeing strong disinflation across the board. If you look at Japan, the forecast from their markets is inflation of 0.25% for the next 10 years. Europe, Germany, they're down at about 70 basis point inflation for the next 10 years. It is clear that the market thinks disinflation is coming. That has brought German rates down to negative 25 basis points, negative quarter point. We've seen the 10-year go from 3.25 last year to just under, 2.10 right now.
Why is disinflation or deflation so worrisome?
Well, right now we're at a place where the Fed wants the economy to continue. They want the labor market to stay strong. They want to keep people well employed. They want to keep the recovery going. In order to do that, right, they have to make sure that the economy continues, and they want to make sure that, if anything, they err to the side of being conservative. So we expect them to have a dovish bias coming out of this June meeting, so because they don't have a lot more ammunition right now. So they want to keep the recovery going, and they're going to be careful to make sure they accomplish that.
Steve, you want to jump in?
Well, I think the question becomes whether or not they use those few bullets that they have and use now, and how they use them. And there's some discussion right now that if you are going to shoot to kill, which is another way of saying go big or go home, which Bill Nelson, a former Fed staffer, out with a piece today saying do 50 in July and then go back on hold.
Wow.
Which is, it's wow from a guy.
When was the last time we had a 50 basis point?
I'd have to go back and look. I could do that pretty quickly.
Someone on our air said it last week. Remember?
Yeah.
I forget who it was, but I went back and I said, did I just hear you right?
Well, the idea being is that when you don't have a lot of ammunition to use what you're going to use very effectively.
Use the elephant gun.
As much.
The elephant gun. Jim Paulsen, what would the market reaction be if the Fed cut by 50 basis points in one go?
Actually, Melissa, I think as long as they explain the why, and they didn't explain it in a panicky fashion like they thought if we didn't do something here soon, we're going to head right to recession. They were more of, insurance cut, and we're going to ensure the sustainability of this recovery. And look, I think they can make a great case. If you're the Fed and you say, which is my biggest risk? Is it inflation right now, or is it recession? I don't think it's even a debate. And they can make that case, and they can say, look, we're going to fight the biggest risk in the room. And we're going to fight that. And if it picks up, we get better, we'll take one back. What's the big deal?
If I could just add a caveat to the idea is how to use the elephant gun.
Sustainability, Steve.
Is how to use the elephant gun without scaring everybody.
Right.
That's the question. And that's maybe what you might do is say, we're going to do 50 here, going to hold, and then just it's not a series of cuts that are coming. But we feel confident 50 is enough to get us where we need to be.